Indian stock market surged, Sensex crossed 50,000. Despite the corona pandemic hitting every segment really badly and the ongoing farmers still playing spoilsport, the Indian economy appears to recover rapidly. Creating history, the Sensex of the Bombay Stock Exchange had crossed the 50,000 mark for the first time on Thursday. The BSE Sensex, the benchmark of Indian stock market, had crossed 40,000 in mid-2019, coinciding with the second win of Narendra Modi with a bigger mandate. It was late in 1999 that the BSE index crippled from the Harshad Mehta scam to cross 5,000. The Sensex had travelled a long way from 5,000 in the turn of the new millennium to 50,000 in just 2 decades. Sensex, considered a pointer of Indian economic prosperity, comprises the 30 largest and most actively traded stocks on BSE. One of the oldest stock indices, BSE Sensex is considered as an important financial gauge to measure the growth and development of Indian economy. The journey of the Sensex has a history of little over 40 years. The Sensex began with 100 in April 1979 and crossed the 4-digit figure of 1000 in July 1990. The BSE index surpassed its first milestone mark of 5-digit and magical 10,000 in February 2006. But the surge was quick from 10k to 20k. BSE Sensex breached 20,000 mark in a little less than 2 years by December 2007. In the next 8 years, the Sensex crossed the next mark of 30,000 in March 2015. It crossed 40,000 in May 2019 and made history of a remarkable point of 50k now. It's not just Indian economy's growth and other Indian factors which have made the surge. The Indian stock markets have always been influenced by movements in the international stock markets. The Wall Street had hit new heights, coinciding with Joe Biden assuming office as the new president in the US. The impact of Biden has reflected the world over as an expectation of injecting more stimulus into the US economy, considered the largest in the world. The Dow and S&P 500 recorded an all-time high and the Nasdaq gained 2% thanks to the Biden effect. Though the surge of Sensex is considered a positive indicator of a booming Indian economy, there has always been critical views on the impact of Sensex and the economy. They don't relate the growth of stock exchange indices with that of the GDP growth, the post-pandemic scenario in particular. The critics feel that the reason for shooting up of the BSE index is just a reflection of investors preferring investing in large companies. This makes the shares of such bigger corporates go high, which automatically get reflected on the Sensex. The Nifty of the National Stock Exchange, considered the second next important indices of stock exchanges in India, has also moved ahead and crossed a new milestone of 14,700 on Thursday. Coming back to the Sensex, one should remember that it was just a few months ago that it plummeted to a pathetic low of 25,638 in March 2020, coinciding with the outbreak of coronavirus. But the comeback now has been surprisingly magical, that the index doubled in 10 months and crossed an all-time high of 50,000. The Nifty, which was at 7,511, also pulled back amazingly to double now. The foreign institutional investors who fled Indian markets are back. So also are the domestic investors. Let's hope the stock markets will keep rallying ahead. So also would the Indian economy. Please subscribe the channel. Also click the bell button to get the latest updates.